extend a warm welcome to the management of CreditAccess Grameen Limited for joining us today and taking out their valuable time to speak about their upcoming NCD public issue. To quickly introduce our esteemed speakers for the afternoon, we have with us Mr. Kumar Hebbar, Managing Director and Chief Executive Officer. Mr. Udaya is a veteran in the microfinance industry who established that inclusive finance could be succeeded with a market-based model. He has been the architect behind the transformational journey of building the CreditAccess Grameen brand as a leading microfinance institution in India. He is a seasoned banker with over 35 years of rich experience spanning across operations, including rural, agricultural, and micro banking fields. Along with him, we have Mr. Ganesh Narayanan, Deputy Chief Executive Officer and Chief Business Officer. Mr. Ganesh brings the diverse experience of over 23 years, spanning strategic planning and spearheading several key projects. He has been credited for creating a culture of business excellence and delivering superior benchmark performances on several occasions in his previous stints of working with prominent organizations including Yes Bank, Fullerton India Credit Company Limited, and ICICI Bank. We also have with us Mr. S. Balakrishna Kamath, Chief Financial Officer. Mr. Kamath comes with 30 years of experience in finance, treasury, fundraising, corporate governance, and compliance functions. He has held various leadership positions throughout his career from 1993 to 2020 across various industries in the largest multinational conglomerate of India, the Tata Group, covering India and global markets. Once again, a warm welcome to all of you. Over to you, sir.
Thank you, Harit. My pleasure to talk to your team, talk to your investors in terms of our upcoming NCD, which is opening on 14th of November. This is about the terms and conditions. All those will be displayed later, but this is more to improve our asset liability mismatch, to make it positive ALM, to have a long-term and stable funding for the company, which is while there is enough liquidity for us through banks, and we believe that we should not be depending only on banks, because they have been increasing their limits every year, because we keep growing almost 25% every year. So we expect them to keep lending, but at a point of time they have a challenge to increase their limit. I mean, based on our pace of growth. Therefore, we believe in adding more different avenues to stabilize our ALM position by having long-term funds, stable funds. In that direction, we have been accessing international funds, we have been accessing non-banks like development institutions funds, and now we are trying to look at one more avenue of public market.
So as of September, our gross loan portfolio stands at 16,539 crores. We are close to 38 lakh borrowers. We are present in 333 districts. We have close to 1,700 branches. We have an employee strength of 16,018 employees, out of which loan officers comprise of 10,826. Our first half PAT stands at 316 crores. And as I said, we are focused purely on rural, which is like completely underpenetrated. We know that only 9% of formal credit has reached rural India, and there is a very large space for us to operate. Thank you. Next slide.
The slides.
Yeah. Okay. So CreditAccess has a very long history. So we started as an NGO in 1999 and moved slowly towards acquiring a license, NBFC license in 2007. We've got a very strong demonstrated performance all through the years. 2018, we went public. 2020, we acquired Madura Microfinance. With that, we have a very strong presence in 3 key states today: Karnataka, Tamil Nadu, and Maharashtra. We operate in around 14 states and 1 union territory. We are growing constantly across the country. So a short update on the promoters. CreditAccess India is the promoter of CreditAccess Grameen Limited. They hold around 73.74%. CreditAccess Grameen has 2 subsidiaries under it. One is Madura Microfinance and CreditAccess India Foundation. Madura Micro Education, which is a subsidiary of Madura Micro Finance, is dissolved as of October 31, 2022. So CreditAccess India specializes in investments in microfinance sector. Basically, that is their primary focus. They operate in 3 countries: India, Philippines, and Indonesia. They comprise of around 253 shareholders. Marquee investors as a part of CreditAccess India include Olympus with around 15% holding, Asian Development Bank around 8.76% holdings, and a few other large investors. We have around 249 other shareholders holding less than 5%. CreditAccess India has been a very patient investor in CreditAccess Grameen. They have stayed with us for a really long time. They have repeatedly demonstrated support all through COVID and demon and multiple years through the journey. So shareholding pattern as of September 2022, the promoter group has 73.74%. FPIs hold 9.33%, mutual funds and AIF at 10.23%, QIB 2.45%, and others at 4.25%. Credit rating, we are the best rated standalone microfinance company in the country today. We have a rating of AA- from India Ratings. ICRA and CRISIL are at A+ positive, which was A+ stable in FY22. So we also have comprehensive microfinance rating at M1C1, which is the best. So I'll briefly run you through the business model. We believe CreditAccess Grameen has a very differentiated business model compared to any other microfinance company. The key differentiators for us to list down, whatever we do is always customer-centric. Hence, we have built a set of products, well-researched set of products that cater to all needs that a customer can go through when they are associated with us. So resulting in a very strong customer loyalty. Around 43% of our customers only borrow from us, right? So which is a significant number. Like I said earlier, we also expand only through a contiguous district approach. So we will enter a new district once we reach a border. Similarly, we will also reach a new state only through this approach. So when we cross a district, that's how we cross into a new state. So giving us significant knowledge about that local area that we want to operate. And we have continuously invested in technology. We are one of the very few MFIs who got a CBS very early on. That has helped us deliver differentiated products, differentiated repayment mechanisms. Everything that our customer needs, the CBS solution has been able to give us a very big advantage. While we've changed many things in the traditional microfinance model, we continue to operate in the classical joint lending model. So this is the JLG model, and we continue to focus on that. The mode of delivery is a lot digitized today, but the core functions of how a group is formed, how it is appraised, what all goes through before lending and after lending is something that we continue to hold very close to our heart. Risk management in this business is very fully integrated for us in all our operating processes. I will run you through some of this as we move forward. We have a very strong senior management team, internal audit, and a control framework. So, these key differentiators and the focus of rural, we believe that last 2 decades, the company has been able to give you a very, very consistent and strong growth and is poised to take further, growth over the next 5 to 10 years, focused on microfinance as we move forward. Right. So a little bit on our products to understand. So like I said, we have a very diverse product suite. So all needs of our customers, be it income generation, education, festival, medical emergency, water, sanitation. The concept is to offer all that a customer may need in different stages of their association with us, and ensure that they don't have to really run around for all their needs. So we have tailor-made products. We have given flexibility in the loan sizes than the conventional model. It is possible that in the same group, customers could have different loan sizes basis their requirement, basis their ability to pay. So that is again unique in this business. We've also given a repayment flexibility. Our customers can choose weekly, bi-weekly, or a monthly repayment option basis their cash flow, right? So all this flexibility has resulted in a very strong customer retention. CreditAccess has close to around 85% customer retention, which is also a very strong performance in the industry. So as discussed earlier, we only expand through a district-based approach. So that has given us very strong understanding of the newer geographies that we enter into with respect to understanding the economic situation, any other natural calamities that could happen, getting manpower. All that has helped us grow from different districts, but continue to maintain the quality of the portfolio as we grow, right? So we also ensure that there is very strong diversification when it comes to districts around most of our branches, right? So we don't have any district which has got more than 4% of the consolidated AUM. Most of our branches are less than 1%, 1.5% when we speak about the penetration of those levels. So again, technology, almost everything today is tech driven. So is our business. So the complete onboarding journey is today digitized. We take the customer onboarding without a paper as far as possible. Only regulatory requirements are places where we hold paper. There's a conscious effort to make this more and more digitized. All our field staffs have tabs today for everything that they do, loan disbursement, collection, everything is digitized today. Like I said, because we have a CBS, we have a very strong flexibility. We have a very strong advantage in offering flexibility for our customers. So we are able to do cashless disbursement. Almost 100% of our disbursements are in cashless mode. And we have enabled the digital collection for customers who want to pay digitally. So that is future ready for us, we believe. So we have, this is something that we are continuously working, right? So we also have technology implemented in functions like audit, risk, all control functions also use technology very, very efficiently. So like I said, while how we offer has undergone a lot of change, the traditional JLG model we continue to remain focused on. We take anywhere between 7 to 10 days before we can actually disburse a loan to a customer from the time she starts training with us, right? So we spend enough time before we actually give money to the customer. We ensure that the groups are self-formed. We ensure that they live close by. We ensure that they are clear about how the loan should be utilized. So a lot of checks and balances goes in before we give money to the customer. Right. So we also remain focused, like I said, rural. So that means you will have a set of livelihood activities, not just one in a particular family. So they are able to absorb shocks better. They are more focused on essential services. We've seen that help us all through COVID, etc. Right. So it's a very time-tested process. We continue to invest in improving this more with technology, and make this a very strong business for us to move forward. So risk management is something that is very closely integrated with all our processes. Like we said, the district-based approach gives us a better balance in risk in identifying which geographies to operate, what are the social, economic, political, various risks that could come in entering a new geography. Right? And ensures we have a high quality growth. We have a very clear target segment. We are focused on rural. We are focused on low income household. We ensure, like I said, it is self-formed groups. We ensure there is sufficient training, etc. We also do significant amount of effort is going into customer due diligence. We do a 5-day CGT. There is a GRT process. There is 100% customer house visit, discussion with family members. We have a comprehensive bureau check that goes into the due diligence. The entire group is responsible for the borrowings, so they support each other in difficult times. We also today assess cash flows, giving us better visibility to what is happening because of the change in regulation. We have a very strong customer engagement model. We meet customers more than any MFI. So we meet our customers every week, right? So we meet 4 million women, 4 million households every week. Is a significant effort in developing a relationship with the customer. So you are there first to meet any of your customers' needs. You are meeting the customers more than any other MFI. So we've seen all of this consistently help us maintain a very strong relationship with our customers. We also have a very unique employee incentive structure. We don't incentivize our employees for disbursements or collections. It is more driven towards addition of new customers, process adherence, ensuring that customer servicing is of a certain standard. All of these are well monitored, well oiled. This is given very good advantage to us with respect to how the customer experiences in dealing with CreditAccess. So this is one of the first things that our customers recall when we ask them what do they like about CreditAccess. Is about the culture, about how our employees deal with them. So that comes as their top retention, which is a very good illustration of this model. We also have an employee rotation policy, which takes care of various risks because we hire from the community that we lend to, right? So we ensure that we hire only freshers. We place them at least 50 kilometers away from the native. We ensure that any field officer, which is your Kendra manager, first level officer, is rotated every year. They don't handle the same set of customers more than a year. We have rotation policies for layers, which are branch managers, etc. So, which is helping us maintain a very good quality of portfolio. Right. So we also, like we said, the business structure largely follows the traditional structure. You have branches managed by branch managers, area managers, regional, zonal, and business heads. Right. So that's the business structure. However, we have, like I said, we hire only fresh. We put them through very, very strong training process before they are put in the field, even when they are deployed to branches. We handhold them for at least 3 months before they start handling customers on their own. So which has resulted in very strong employee loyalty also towards the company. The kind of incentives, the kind of growth, our internal job promotion policies, etc., result in a very high retention rate for us. Like we said, we have a very strong risk management culture, which is supported by internal audit, quality control, and field risk teams. Our first layer of defense is always the business team. The business supervisors ensure continuous monitoring of various things that we do. Supported by these 3 functions, we have one of the highest number of control structures in the MFI industry. Right, so each of my branch goes through 6 audits every year. Right, so every field officer has a risk score, every field officer has an audit score. So all of that is very, very unique for us. The internal audit team is a very strong, close to 300-350 member team. We have a quality control team, which is the business support team, which is a self-audit team within business. Right, so they are actually present at ground all the time. They have a set of branches where they go and visit. They travel with the Kendra managers, meet customers, go to every center, to ensure that even before an auditor can tell you, gaps, there is a proactive team within business which focuses on process, which focuses on practices, etc. Because it is a fully process-driven business, it has to be continuously reinforced. The field risk team, which reports into the CRO, also does independent checks. They do field visits. They check all internal processes. So it's a very, very strong, audit and risk structure, both self-audit, like I said, internal audit and risk teams, all of them complement what we want to achieve with respect to balancing how we do business. Right. So as we speak, we are present in 14 states and 1 union territory. We are there in 333 districts with 1,684 branches. Our very strong states today are Karnataka, Maharashtra, Tamil Nadu, and MP. However, the other states will catch up because close to 50% of our new acquisition is happening from the newer states. So we will see that over the next few years, the mix of the concentration will continuously keep changing, which is a very, very desired output for us. Yes, so this is one more focus area for us. We have very strong positive ALM. we focus on increasing this much better. So hence we are diversifying into long-term fundings, international borrowings from development finance institutions, which will increase our positive ALM as we move forward. So if you see our performance strength, we've been able to give a CAGR of 18% on portfolio. We've been able to give an 8% CAGR on branch network. Borrower growth has been timid around 3% compared to FY20. It's a negative, but we are able to add significant number of customers post-COVID. So the last first quarter was timid, as you know, because of change in regulation. But from Q2, we think we are on track. We are poised to increase our customer base as per our vision. So this is a presentation of how our state mix are. So like I said, our diversification with respect to branches, with respect to borrowers, state are steadily changing, and it will diversify further over the next few years. So you could see that from FY20, if you see the portfolio in Karnataka has dropped to 36% from 40% in a span of 2-3 years. So this is something that will continue to change as we increase our penetration in newer geographies. So again, revenues, we have been able to give a CAGR of 27%. FY22, we had 2,750 crore of total revenue. Our NIM stands at 10.9% for FY22. PAT of 357 crores and earnings per share at 23.22 in FY22. So again, repayment rate, FY22 post-COVID, the recovery has been very strong and stable compared to any other industry. We are noting that the microfinance industry has been able to come up very, very strong. FY22 on a console basis, we were at 93.19, much better when you look at standalone. We continue to improve this further. Q2, we were at around 98% collection efficiency. So we are seeing a very strong comeback. So we have a very strong net worth again, around 4,000 crores in FY2022. Very strong capital adequacy at 25.87 FY22. Sorry. Yeah. So thank you for the opportunity. I'm going to pass this on to my colleague Balakrishna Kamath, CFO, to help us understand details about this. Thank you.
Thank you, Ganesh. Good afternoon, everyone. We'll take you through some of the salient features of the present tranche issue, which is going to open on the 14th next week. The lead manager is AK Capital, the debenture trustee is Catalyst. We have got the rating of AA- from India Ratings. The legal counsel was Harit and Company. The banker to the issue is ICICI Bank. Our auditors are Deloitte and PK Sridhar and Santanam. They are the joint auditors, and the RTA is K Fintech. Now moving on to some of the key highlights of the issue. We are going to issue secured, listed, redeemable, non-convertible debentures with a AA- rating with stable outlook, for which we had 1,500 crores approval. But this present tranche, which is tranche number 1, would be of 500 crores with a base size of 250 crores and a green shoe option of 250 crores. The issue schedule is, it opens on 14 November and the last date of closing would be 2nd December with the probable early closure in case of good subscription. Security cover wise, we are given 110% security cover, and there are certain other features of covenants which are normal for the industry. Now moving on to the various options. It has been specifically designed keeping in mind the requirement of retail investors, because we want to bring more retail investors to our company. We already equity listed. We want to be, also grow on the debt side. The retail investors need to be given all the necessary options. So accordingly, we have kept the minimum application size very low at only 10,000 rupees, which is 10 NCDs, for which the face value is 1,000 and thereafter in multiples of 1,000. The tenor has been fixed at various options, 24 months, 36 months, 60 months, and we are given attractive coupon of 9.45 for 24 months, 9.6 for 36 months, and 10% for 60 months. The effective yield is much higher, and the redemption amount is also considering various options, and we also have given a cumulative option as well. The maturity, as already mentioned, is 2 years, 3 years, and 5 years, depending on the need of the investor. We don't have any call-up put options. That's about it. With this, I hand it back to IndiaBonds to take you through the further process.
Thank you, sir. Thank you. Now that we have understood the very important structure that the public issue of NCD, secured NCD is coming. Now let's evaluate how as an individual investor you can apply to this NCD using IndiaBonds as a platform. So the first and the foremost basic thing is log on to IndiaBonds website. You have to sign up if you are not signed up yet. Log on to IndiaBonds website, sign up. You have an option to go through via the product menu, which is through public issue, or on the landing page, there is a dedicated banner which is running for new public issue of NCD, which is CreditAccess Grameen Limited. It is a very, very simple 4-step process to apply via using IndiaBonds platform. The first and the foremost thing is you have to select the investor category type. By and large, largely the investors are retail and HNI, which are categorized to category 3 and 4 are defined for retail and HNI category. Retail being category 4, up to 10 lakh rupees as an investment amount is categorized as retail individual investors. Anything above 10 lakh for an individual investor is counted as HNI investor. First and foremost is you have to select which category of investment you are applying for. Retail and HNI. Once you have selected, the second is out of the 6 series or options which has just been informed by Mr. Kamath, you have to select which option you are inclined to. Now, this option depends upon your investment needs, whether you want to invest for 2 years, 3 years, or 5-year option. And then you want interest payment frequency on a monthly basis or a cumulative basis. Once you have decided these options, then you can select the amount or the number of NCDs you want to apply for. You can apply with as low as 10 bonds or 10 NCDs, one bond having a face value of 1,000 rupees. And you can apply in multiples as in amount you want. The retail application size up to 10 lakh rupees. And anything more than that, it is categorized as HNI application for individual category of investors. Once you have selected the series, the third option is you have to add on your details. Your details like your PAN card details, your date of birth, further information which includes your address, city, mobile number if you want to add on. The most and important thing, but as an investor, you have to keep in mind is you enter the correct demat account where you want to have your bonds credited. Fortunately, the biggest advantage of IndiaBonds platform is you can use any demat account with any depository participant, whether it's an NSDL or CDSL demat, you can select it and you can enter your demat details. Make sure that you enter the correct demat details while entering the application form and select the payment option. Up to 5 lakh rupees, it is UPI application is permitted. So you don't have to run through, do not have to write any, take a printout of an application form. No check is required. Only UPI application. You have to mention your UPI ID, verify your investment details. The amount is being mentioned correctly. The series has been selected correctly. Select on agree and terms and conditions. You can preview your form. A complete pre-filled application form will be available onto your screen. You can verify it. All the details are mentioned correct. Once you verify it, you have to just submit this application form. And that's it. Your application form is submitted and will be going for bidding in the exchange platform. You can download this application form for your preference, or you can even email it to yourself. This way, you can apply to public issue of NCD. Make sure that this is a NCD issue where first come, first serve is applicable. So earlier the better. For IndiaBonds customers, we have kept this issue live right now. And even though the issue is opening on 14th of this month, November, you can still subscribe from the website and the application will be submitted to the exchange for bidding on 14th, the first day of application. So you will be the first mover advantage in terms of subscription of application form.